Cool. Welcome everyone to Connect to the Future. Hopefully today we will all be able to have our views in. But today we have our lovely guest Toffy, as she introduces herself. She'll be taking us through her topic. In the meantime, I'd like to hand over to Vincent to please give us some gratitude, vote of thanks.
Oh, I'm doing gratitude. How did I let myself into this? Oh, yeah. By the way, I write and I forget. So that's why I have no clue what it is I've said earlier on. But anyway, hi, guys. I mean, we've already checked in with some of the guys that came in early, you know, the early comers like me. No pun, early comers, right? Like me. But just to reflect a bit, we are, I think, on week 8, if not week 9. I think, I don't know. I'm confused because the guys that I work with every day, they're sitting on week 9. What is it, Ember? There, so I think it's week 9, and yeah, I think we are on week 8. But what is clear to me is that it is possible to do life irrespective of the conditions that are abnormal, that are unprecedented, that in the first week, I think, you know, brought a lot of shock and emotion to a lot of us. And certainly, you know, I also went through pretty much the same sort of ebbs and flows of feelings about COVID and everything else. But I mean, coming into week 2, week 3, I was back on solution mode and I was thinking things. And in fact, this platform, you know, came to being having thought of, you know, what is it that we can do to take advantage of the situation that we're in. So we're sitting 8-9 weeks later into the whole thing. And I tell you, I think my life has never been better organized. It's funny. I'm not rushing anywhere. I'm enjoying my surroundings. I can access the shops without having to clamor on anyone, particularly the morning exercises. Now, I mean, currently I live in Pretoria. You could never get in a morning ride in Pretoria without Corona, right? You'll never be able to get your bike out on the streets because there'll be a million other cars competing on the road with, you know, you being on a 2-wheeler. And generally you'd go into an indoor bike, which is not really exciting. And you'd wait for the weekend to drive 45 kilometers away just so that you can get a decent and a safe ride. But these days, you go out, you find people jovial, happy to see each other, nice to each other, standing around having good conversation with each other and just enjoying being outside and taking it as a privilege. And that has been, you're not the moderator, Shanine, and that has been perhaps one of the key takeaways, which I feel for me, this COVID situation has added positivity to my life. Apart from that, a lot of the businesses out there are screaming for help to try and cope with life post this COVID. And a lot of them are saying, we're not going to go back to the way that we did things before. It seems like we will be able to continue in the same setup. So there are calls for modernization, calls for restructuring, and people are looking for help to try and stabilize their work environment post-COVID in a similar sort of setup that is currently in play during COVID. So that brings exciting opportunities, of course, and we are out there. We are speaking to people and people are speaking to us right in the middle of COVID. Who would have thought, you know, because at first we thought this is like calamity, but suddenly we feel like it's containing a lot of opportunity. So I'm grateful. I'm encouraged. I mean, I would like to go and do my pedicures and my manicures and get whatever choice of alcohol I would like to get. But that besides the way, you know, I'm thoroughly happy and satisfied. And I thank the universe every day for the opportunity. So yeah, that's my gratitude for today. Thank you, Holly.
Thank you. I mean, I could have stopped you a minute ago, but it was such a decent gratitude. Thank you so much. And it just actually plays into everyone's role. I think we all kind of have thrived in the situation. We could have all just whittled down to nothing, but everyone is still here. So thank you guys. Without wasting any more time, I would actually like to hand over to Toffy, who will be taking us through behavioral finance.
Yep. Thank you, everybody. And um, it's such a pleasure to be joining you guys tonight. Well, the situation in Asia is pretty much the same as in the other side of the world. And I'm still safe here. And sending love all the way from Asia to Europe, to South Africa, to you guys as well. So yeah, today I'm going to share about my PhD dissertation, and hopefully you guys won't fall asleep in front of me. Because I almost fall asleep every time. You know, I've been with this thing for 6 years and I'm like, oh my God. So yeah, well, some of you guys might be interested. So let me tell you first about theories. So let me start with the original of behavioral finance. It started around 1738, so pretty much like 300 years ago. Start with this guy saying that everyone is rational. So they think that we think rationally, we behave rationally. Everybody invests, spend, earn money, and spend in the way they should be doing. And people are risk averse. So people are scared of risk. So that's what the theory said until 1954. So it has been like that for 200 years. They believe that we are rational. Then one day, there's another guy come up and say that there's this theory saying that actually there's a risk in this finance world, in this financial market. So let's don't put all eggs in one basket. Have you guys heard about this word before?
Yeah.
So if you put all the eggs in one basket and you drop that basket, you happen to break all the eggs, right? So this guy says that don't put all eggs in one basket, and that applies to the financial market as well. So whenever you invest, whether into the stock market or put in your savings or invest somewhere, don't invest in one place. If that place crashes or something happens to that saving, then all your money will be gone. So that's a theory in 1952, 1954, something like that. So after that, in the financial market, what we have found is that people are not really rational, according to the theory. People are not really rational. What happened is that people actually have under-diversified portfolio. Do you know the word diversified? You do, right? In terms of investment. Yeah. So people are not really aware of this diversification in their investment. So whenever they invest, they usually invest in one or two assets, one or two types of assets. Or even if they invest in stock market and in bond markets or in other types of funds, they actually invest in one or two types of stocks or funds. So that doesn't really diversify the whole portfolio, the whole investment portfolio. And that's what we have observed in the real market. So that actually explains that people are not really rational after all, because if they are rational, they have to diversify their investment into many financial markets, into many products. And even they invest in stocks, bonds, buy land, buy houses. They should buy more houses, like one in South Africa, another in Asia. to diversify the risk, right? But they usually invest in only one place or one type. And the other thing is that what we have found in the stock market is that people trade in the stock market excessively. They trade too much. They trade too often, or they trade with a lot of money that they can't really afford sometimes. And what they do is that they do day trading. This word day trading actually means that they trade, buy and sell the same stocks within the same day. So basically they buy this stock in the morning, and if the price goes up within the same day, they just sell it, the whole thing, and they get the price difference within that day. So that's what we call day trading, and that happens a lot in the stock market around the world. The other observed behavior that we have found is that investors usually sell winner stocks and hang on to loser stocks. So if they buy stocks and that stock goes up, they usually sell it really quickly because they want the profit to come back to them, to hold the cash on hand. But if that stock drops, the price drops, then they usually hold on to it because they think that as long as they don't sell it, they don't lose anything. So that behavior is actually not really rational, because if the stock actually goes up, they should be holding it to keep the price going up so that the value on their hand is higher and higher. So if it goes up and they sell it, then it means that they stop their gains at the point where they think that, oh, it's going up. So that's another hit behavior. The other one is that they prefer lottery type stocks. So I guess you all have lotteries in your country, right? So lottery is like you buy something and then you bet between gaining large amount of money or losing the whole money. So there are those types of stocks in the stock market where you can bet on the price, the stock will go up really high, or sometimes it drops really low. So we call that type of stock lottery type. So there are a lot of trading volume in the stock market that trade lottery type stocks. Okay, so those are the behaviors that we saw in the real world. So it actually contradicts with the theory in the past. So there are a lot of explanations for those as well. So for example, it's overconfidence. People are too confident in themselves so that they keep trading. That's why they trade a lot. And also they learn by trading. So as they trade a lot, they learn and they keep trading still. So that's why excessive trading always happens in the stock market. And the other one is that they trade for fun or for entertainment. I used to work in securities company in Thailand, and there are a lot of my customers who enter the stock market just to trade for fun. A lot of them are retired people because they don't know what to do with their money and their time as well. So they just enter the stock market and then play in the stock market as a game, just to bet day by day. So a lot of people enter because of the entertainment. And the last one that it becomes my PhD dissertation is that people trade as a form of gambling. So when people once enter the stock market, for initially they might enter because of investment, but once they enter, they saw the character of trading stocks. They think that it's more like a high and low betting, like in the casino, betting with this stock will go up or go down. So the character of stocks is pretty much, I would say, the same as card games or casino. So a lot of people enter the stock market and trade as a form of gambling. So my paper is to find whether people actually trade as a form of gambling or not, and whether it has the relationship with excessive trading or affect their financial situations or not. Yeah. So it's pretty long. So I would say that I combine psychology theories with finance theory. So I use this measurement from psychology. This measurement, it's called gambling disorder questions. So I use this measurement from psychology and apply into finance world. So I did a survey with Dutch people. So I was in Amsterdam. I went to the Netherlands for 3 months to do my research to collect all the data. And this questions contains 9 questions within this gambling disorder. And well, let me briefly tell you. First one, it's the needs to gamble with increasing amounts of money. The next one is you feel restless or irritable when attempting to cut down or stop gambling. The third one is you have made repeated unsuccessful efforts to control, cut back, or stop gambling. The fourth one is that you often preoccupied with gambling. So you think of ways to get money to come back and gamble or trade in the stock market all the time. And you often trade or gamble when feeling stressed or depressed or guilty. When you feel something negative, you come back to the stock market to entertain yourself. The sixth question is that after losing money in the stock market, you often returns another day to trade to get back the money that you've lost. We call this theory chasing one's loss. The seventh question is that you lie to people close to you, to your family, to conceal the involvement in trading or gambling. And last but not least, the eighth one is that you have lost a significant relationship, job, education, or career opportunity because of trading or gambling. The last one is that you rely on others to provide money to relieve desperate financial situations because of this stock trading. So only 9 questions actually can tell whether you are more likely to be addicted to gambling or not. So if people answer yes to 3 questions or more, we can just say that they are more likely to be addicted. And I actually have categorized them into into 5 groups of people in terms of trading. The first one, we call them sensation-seeking investors. So these sensation-seeking investors is that people usually trade because the fun or the thrill experience from trading. So in the research, we found that people who have tickets from driving fast are usually excessive traders. So that's really surprising. So it's really natural. You drive fast, you tend to get tickets, and you tend to be aroused by those excitement. So these people tend to trade a lot more than others. That's what they found in the research. And these people, we categorize them as sensation-seeking people. The second group, we call them wealth aspiration investors. So people usually have a desire to get rich from the stock market and willing to take risks, any risk to for this purpose, to get rich. So in the research, we found that stock traders and lottery players in many countries are driven by the same aspiration. So usually the volume of lottery stocks usually goes up. The trading volume of lottery stocks usually goes up during the economic downturns. So even the economy is really bad, people still trade a lot in the stock market, and especially in the lottery stocks. So we call this type wealth aspiration people. The third and the fourth one we call past gamblers and risk-taking gamblers. So these people are people who have gambled in the last 12 months and more likely to gamble again. And we use the test called domain-specific risk-taking scale from the psychology book as well. We actually have found that investors usually trade less on days that lottery jackpots are large. So it's actually a substitute between one another, lottery and stock market. So in many countries, when the lottery jackpots are large, that day the stock market's volume goes down. So if the lottery jackpots are small, then the volume of stock markets go up. So we can see the shift between these two financial market. Well, I'll call the lottery market as another financial market. Yeah, but we can see the shift between these two. So it's very surprising because actually lottery market shouldn't be a financial market, and there shouldn't be a complete substitution between the two, right? But in many countries, we see the shift of volume between these two markets. So these people, we call them risk-taking gamblers. And the last one, the most extreme types of investors, we call them excessive gamblers. So these people are people who fit into at least 3 or more questions that I've asked earlier from the 9 questions from psychology. So these people trade a lot, and they may feel restless if they don't get to trade. And some of my customers are like that. I used to have one of my customers, she's an auntie. She trades every day, and she trades a lot. And during one period, the stock market is not really good to trade that time. So I was calling her, auntie, I think you should stop trading for a while. Well, in the first few days, she was very nice. She says, okay, I believe you. So I won't trade. And then on the 3rd day, she calls me again and she said, I can't stay like this anymore. She's really serious that time. She's like, I can't stay like this anymore. I think I'm getting sick. And I went to the doctor. The doctor actually tells me that I have to trade because otherwise my heart won't work properly. And that's what he said to me. And I'm like, really?
No ways, auntie.
Yeah, she said she has a heart problem and it has to keep beating. She has to be excited all the time. And I was like, okay. Yeah, so I would categorize that customers as excessive gamblers because she has to trade all the time. Otherwise, she'll get sick. You know, she feels restless. She said that she can't sleep, and I have heart problems and all that. So this kind of people actually exist, and from my research, it shows that almost 5% of the investors from my sample, which is, I would say, representative from the Netherlands. So usually if we collect data that are representative from one country, we can simply say that it's almost representative for the whole continent. So because usually you guys behave pretty much the same way, but we can't really conclude that it can apply to the whole world. So my research can extend to another continent as well. So I collected from Holland, from the Netherlands, and it says that almost 5% of people have gambling disorder in the stock market. So they trade too much and they feel restless. They may lie to their families. They might chase their loss. They might return back to the stock market again after they lose their money, trying to get back their money, or it's difficult for them to stop trading. And in my research, it also shows that people who trade a lot, well, I guess you guys might already know, it's more like a common sense, but no one actually proves it in terms of number. People say that, don't gamble in the stock market, don't trade too much, otherwise if you lose, then you keep losing more. But there's no one actually collect the numbers and prove them. So I did it 6 years. But yeah, it's worth it. So people who are addicted to trading, if they trade too much, in my research, it says that 60% or more usually have problems in terms of their financial problems. So it's pretty dangerous. And the results, now I have presented in the Netherlands, in Thailand, and also I went to New Zealand. I went to England as well. I have presented this paper and the results to a lot of professors and also practitioners, and also Bank of Thailand and all that are quite aware of this, because they actually know, but no one proves it. Once I showed them the number, they were like, whoa, 60%. And they were like, oh, 5% or more, they are addicted. And this actually affects a lot. And even a small number of people have an effect in terms of their mental health. So now we are trying to extend our research to find if people who are addicted to gambling have serious mental health. And now we have found a few evidence of hospital admission because of mental health, and to be specific, because of stock trading. Yeah, and
Sure.
I think there are research in Spain saying that there are a few percent of patients who add to hospital, like psychology. How do you call them? Like hospitals that treat people with mental health problems. Do you have a specific name for
I'm
it?
tempted to say psych wards, but clearly that's extreme.
Yeah.
Yeah,
How
but
to say mental health hospital?
yeah,
Hospitals.
yeah.
Is it not rehabilitation centers?
Something like that. Yeah, you can call it like that. It sounds better than psych wards. But we do go to those kind of hospitals as well, us who work in the stock market, because sometimes we deal with customers, we deal with a lot of stress from trading. But there are a lot of patients who enter hospitals because of stock trading, and it's a sad thing. There are a few percentage that people try to commit suicide because of the loss from the stock market as well. So yeah, that's why I'm trying to extend my research to those parts. And yeah, that's about it. My 6 years within 20 minutes.
That's well compressed into 20 minutes.
Yeah, so I hope you guys are still here. Is anyone?
If you haven't noticed, well, sorry, I'm not the moderator today. But I'm just answering
old
that.
habits.
Die hard. There's been questions galore here, and one thing is that I'm just saying, oh my God, are we going to have time to get through all of these? But I'm excited. Sorry, Wally, you can carry on.
Yeah. So basically what I did is I kind of opened it up for the guys as you were talking to, because sometimes a question kind of sparks up as you're talking versus later you've completely forgotten about that. So
That's why we
able
keep
to kinda,
things called notepads. I'm just saying.
yeah, it is the future. So everyone was able to kind of relay their questions in the chat. So
Keep iPhones. Thank you.
don't flex, boy. Don't flex.
Should I put my HoloLenses already or later?
As usual, Mr. Vincent wants to go through our time. So I'll go straight to at least one of the questions that I can see. I think Shoni started asking what she's very interested in finding out what's the difference between gambling, trading, and investing. Because at this point in time, there seems to be a very blurred line.
So actually, a lot of people think that they're all the same. Yeah, but investing, it should be rational. You should hold many assets at the same time to diversify your risk. So if something happens to one asset, your money is still there in the other assets. So that's what we call investing. But trading is what we are trying to take risk to gain something back higher. So have you heard of the word high risk, high return?
Yep.
So that's when people becomes a trader, when people are willing to take risks to get a higher return. But investing, you're not willing to take risks to get a higher return. You just try to make your money grow steady, constantly, and slowly in many assets. And gambling, it's totally different. You are willing to bet all in for one thing to get a really high return or lose the whole thing for it. You're willing to play high and low, to bet in one asset, whether it's going up or going down. If it goes up, you get double. If it goes down, you lose the whole money. So that's gambling.
Would it be fair if we said maybe then the differentiating factor between all those three things is how much risk you're willing to put on the line? Because at the end of the day, they all kind of give you an end result, which is either monetary or something sort of a gain or a loss, depending on how everything went through.
Yeah, actually, you can categorize investors in the financial market into three types, basically. Yeah, real investors, traders, or gamblers. Yeah.
Cool. And then we'll move on. I don't know, Shoni, is that good enough for an explanation on your side? Thanks, Shoni. I'll keep reading these, but I'm sure some people like Charlene, would you like to read yours or? Okay, I shall go ahead. Did you use theory of addiction to unpack gambling disorder? Is one of the questions.
Theory of addiction to unpack. Well, the addiction theory in the psychology book is usually done with substance addiction. So it's really hard to apply with gambling disorder. Addiction in those cases usually comes from like cigarette, like nicotine addiction, substance addiction like heroin, or things that are not really related to behavior like trading. So we're trying to get something closest to investing or trading, which is gambling disorder. Yeah, so it's pretty overlapping with one another, but yeah, we're trying to combine the theories together.
Nice. And I think what she also wanted to know is, obviously, are there any positive benefits that can be drawn from understanding this addiction? Obviously, I think we always try and say you can only measure what you can. You can only actually
manage what you can quantify.
Yeah, that's what I wanted to say. So once you can actually understand these addictions, could you actually draw a positive out of that?
positive benefits, right? Well,
and
yeah.
just to unpack it a bit more. So, I mean, obviously we're talking about it now as if it's a bad thing, but if we would draw from these insights and how, you know, how people get addicted to these things, are there positive elements that could be then used, for example, for a good? So how do we get people addicted to using condoms every time they have sex, for example?
Okay, well,
I work in health.
yeah, that's an interesting topic, but let's change the topic. Okay. Anyway, the whole point that I've done this research is not pointing out the bad sides of gambling or addiction. My whole point is that I want to save these people, because there are a lot of people who enter the stock market without knowing anything. They just know that they can earn something from this financial market. So the whole point of finding people who are addicted, and the whole point that I travel around the world, present to people, is that I want this little voice to be heard by large organization, and they can get up and find tools to search for these people and help them personally, because there are a lot of people who are addicted hiding in their homes, trading by themselves. But to find these people and help them not to lose any more money or to lose their mental stability, is that I need help from the company, like securities company, or Bank of Netherlands, Bank of Thailand, or European Central Bank, to find policies or ways to find these people, because I can't find them myself. They have to be the one tracking those behavior in their market, and people who show this kind of behavior in their markets needs to be drawn out and taught how to trade properly, how to think properly, how to behave rationally. Yeah. So my intention is to save them.
So I think I don't know whether I'm lucky or not lucky, but I work in a gambling industry, online gambling.
I forgot.
Yeah.
Sorry. This was not to victimize you. Sorry.
Yeah, and you made me the moderator. Thanks.
Oh yeah. Oh my God. You told me to have a
Oh, that's nice.
Now I will always have a job. So basically, then my question is, I mean, in terms of, I've seen a lot of this. I mean, addiction, as you're saying, is not kept onto the finance side of things. It's everywhere. Addiction is everywhere, in all forms and shapes. But obviously, in every avenue, there usually is always a governing body or a finance or a licensing body that kind of governs these things around it. So, from the gambling perspective, each and every market or each and every jurisdiction has its own people that are there just to do exactly what you're doing, which is good. But what I feel or what I sense from what you're saying is there's almost no governing body in the trading aspect. No one is sitting there and saying this person is, especially in the gambling industry, if you've done a deposit of X amount of money over this many period, we obviously highlight you as a high risk factor, or you've been obviously trying to withdraw money multiple times, trying to do small incremental deposits. All those things are kind of behavioral kind of things that lead us to do some sort of action. But what you're saying or alluding to is that there's none of that in the trading industry.
Well, there are some trackings that, and in terms of what you're saying, it's true. There are some tracking of people who make small trades to trying to manipulate the markets, or trying to withdraw their money and all that. But no one actually points out when people do that and then they make loss, and what happens to their personal life and their financial life. That's all, because those information are confidential. So what they can only do is to track irrational trading behaviors that happens in the stock market, like small trading many times to try to draw attention of other people, and that's it. That's only, I think that's the only thing that I've seen many countries track those people. Other than that, they can't really track people who trade by themselves and make loss and come back again, trying to win back the money and make loss again. None of the country has tracked those people and helped them. Yeah.
Vincent?
Yeah.
Okay,
Yeah,
it seems to be frozen.
Yeah.
Are you back?
Yeah,
Cool.
I'm back. Yeah. Apologies for that. Toffy, that I mean, for the first time, I actually get to hear the gist of your PhD. I know we casually talked about it over coffee, and I hated the PhD idea because it took you away from me a couple of times.
I hate it too.
but having said that, you know, that I've got a perspective relating to trading. Having heard all of these, you know, things that you've unearthed with respect to stock trading, in my mind, I think what you've done is something that perhaps the securities people, things that they are actually pretty much aware of, but because it serves a purpose on the purpose to which they actually exist, they've sort of, you know, not really bothered having to and again, I mean, it's something that you can tell us whether there was much encouragement in having you to bring up all of these things regarding the effects of trading and the psychological impacts of trading and so on and so forth. You can tell us whether there was actually real traction to say, yes, please find these things because we care about the people that actually trade. Because if I follow correctly, I mean, you will correct me if I'm wrong. In fact, going to Amsterdam was probably a good idea because the first stock trading event that was ever recorded in the history of capitalism was actually in the Netherlands. I think at that time it was called.
Didn't know that.
Oh, you didn't? Oh, okay. So, and in fact, trading used to happen in churches. They used to use churches as gathering places. All businesses used to gather there and declare the value of their companies and use people's monies to accelerate production of assets so that they can grow companies. And that was pretty much the inception of stock trading, and obviously it grew to the Americans and to the English at some point and so on, and it is what it is today. Now I'm thinking, because at any one time there's always a limited resource or limited source of things to produce many of the same thing. If we get people that are irresponsible, if we get people that are mentally unstable, if we get people that are willing to put it all in there without any care, it will actually serve us, because in fact, we just need your money. We don't care whether you actually make money or not. We just actually need your money because, you know, this is what we do. We want to drive our profits up, want to drive our share price up, and so on and so forth. So we don't care whether you lose your mind or not. Just as long as you come and you put something in there and you show activity, we're happy as corporate.
Yeah, I actually agree with you.
Yeah.
So one surprising thing is that I didn't know that it first trade in the Netherlands.
Yeah, yeah.
Oh, okay.
So that's where they started building ships for voyage. Well, I'm a big historical fanatic. We'll go all the way to talking about the company, the VOC, which was the Dutch company. I think they said if you were to value it today, it will be as big as Apple, if not bigger, that time. And it was a Dutch company. Yeah.
Your line is very bad, Vincent.
You'll hear me properly. You'll hear me properly on YouTube because I'm recording.
Okay, cool.
Sorry, I don't know if Toffy did get that though.
Yeah. So just in the interest of time, I'm also going to go to a few other questions that were kind of relayed on the chat. So Jimmy was asking things like, is it better buying property? Sorry, what's the difference between buying property, 3 of the same properties around the same province, or actually buying 3 properties in different places? So in different countries, as per se, what would be the investment diversity or diversify cons and pros for that?
Well, I would say I wouldn't recommend to buy only properties. To diversify your investment, well, if you want to buy properties, then choose a few, and if you can afford more, you can invest in funds within your country or in another country, or save in other types of bonds, or invest in stock markets. That's what I will call a well diversified portfolio for your investment. But so I can't really limit the investment into many types. So if you only want to buy properties, then I would recommend to buy properties in 3 different locations. It doesn't have to be in different province. It can be within the same province, but different types and locations. For example, buy a small house by the beach, or another house in town, another one in industrial area, to help diversify. It has by beach. For example, in Thailand right now, there's no tourists, and one of my 7-Eleven shop is by the beach. And to diversify that, another of my 7-Eleven shop is in residential area. So if one branch make loss, I still have another branch that still makes profit. So that's
You go,
what
girl.
we call diversification.
You go, girl.
Yeah, I'm trying to survive here. But yeah.
Cool. Then maybe the aspect of not people diversifying is because they don't have the knowledge or the capital to do so. I guess those are the biggest 2 factors I can think of. Just right out of the bat is, one, I don't know any better that I could have done that split, like you just said, one in an office space, one in by the beach. Okay, cool. That kind of opens up. So maybe we need to better educate ourselves before we engage with any investment, as per se. Cool. Just to move on to another one, I think Shoni asked, was there any age cap for your population? Yeah.
The age cap, I only have people who age over 18. So those people can trade legally, that's all. So I don't limit the age, the higher cap. I will limit the over 18. So I think the highest, the oldest traders in my sample, if I remember correctly, 90 years old.
Wow.
An old Dutch guy. He still trades. Yeah. And
that's what you call old money.
Literally.
Yeah.
I'm being ageist, sorry. I think one of the other questions, I think from Charlene, was more on what are the proposed rehabilitation methods. Did you dive into that sector, or were you more on shining the light on it, and then someone is probably going to take over the rehab side of things?
The only thing that I can think of is to find these people, track them first, and then get them out and educate them. That's the only thing I can think of right now, and that's the only thing I propose to all my audiences. Other than that, in terms of mental health and all that, I'm not really an expert. Yeah.
Cool. So you mentioned another example. I know I keep talking a lot. Another example of people holding into losing stocks or losing investments. I think I'm a victim of this one. When it came to the Bitcoin and the cryptocurrency world,
did you do that?
No, I did. I made some good cash, but also I lost some good cash. So, but I don't say I've lost because I still have my coins. That's my mentality right now. Is
You still hold on to it.
yeah, you only lose when you sell, right?
Yeah, that's
because you never know what's going to happen in 20 years' time. So I've got probably worthless coins, but I have something. To me, they're worth my initial buy-in, even though the world is telling me otherwise.
Or everyone who got into Bitcoin is saying that.
Yeah, you just keep holding on, right? So I think it's very real, and it's I guess it's one of those things that kind of highlights in our lives is a very simple thing can actually be highlighting a factor or a feature in you that you need to be aware of. And the more we are aware of these things, the better we are equipped to deal with them going forward. So thank you for this from my end. I think, Vincent, you asked, go ahead with your trading millionaires.
Yeah, not time to ask questions on WhatsApp. So I'll copy paste because some of them are a bit spicy. So I thought let it not come from me. Yeah, they're very controversial. Yeah, but carry on. Sorry, you're online now. Yeah.
Yes,
Yeah.
thanks. Thank you very much, guys. I appreciate being a part of this platform. So my questions are spicy. It's just from a general observation, what I've seen, especially, well, South Africa, especially in Durban in particular, we're seeing a lot of these new age millionaires from trading. So I don't know if I'm being jealous or what, but is it real? Can people really get that rich from trading in a few months and drive these big fancy cars when we've been working for over decades and we're still trying to have enough money at the end of our month? So is it a real thing? Are they disillusioned? And is it sustainable? Thank you.
So let me repeat your question again. You are asking whether trading millionaires are sustainable or not, right?
Yes, but firstly, is it real? Do people really get rich from trading online?
Well, I would say it's real, but from the research, only 2% out of 100%.
Yeah.
Only 2% actually can beat the market. So
wow.
Apart from that,
That's
they only
interesting.
talk to their friends whenever they make gains, but they keep quiet whenever they
We're gonna
loss.
tag them on this video and say, "Are you part of the 2%?"
Yeah. So are they really sustainable? I would say during a short while, and I still insist that these 2% really exist, but it's a very small percentage. So these people can become millionaires, but there are times that they make loss. But I think they're rational enough and they have good judgment for the amount of trading once they can win the market. But yeah, I've seen some people who are like that, but very rare.
Oh, so basically, I must keep my day job.
Or you could be a 2%er.
Oh, true. I can be that outlier. All right, challenge accepted. Thank you very much. I appreciate your response.
You're welcome.
Right. Interesting.
Yeah. So from Charlene, reward-related brain response. Are you talking about how we keep the losing stocks and
No, I was teasing Punto keeping his cryptocurrencies.
Oh, Bitcoin.
Yeah.
Hey, you gotta try.
And that's actually true because you give reward, you feel like hey, I've got profit back on hand, and whatever I'm holding, I still don't make loss because I'm still holding it, right? Yeah.
But what is clear to me, and this may sound absolutely stupid, but I just wish, there's a friend of mine just before the lockdown, we were chatting about what's going to happen with money, right? And so on and so forth, and part of the discussions was stocks and long-term and short-term investments and all sorts of stuff. And I said, you know, I'm very skeptical about things that I don't understand. I hear people say they buy stock, they're in the JSE, they're in there. And I mean, we've been recruited by people since time immemorial, you know, inviting us to get into these platforms. And I think coming out of this session, I'm more skeptical than I ever was in terms of, you know, this actually being a real financial tool to either generate income or even generate wealth. I think it's an illusion. It's a desire thing, and not necessarily a real financially practical method of having to build cash or even increase wealth. So yeah, thanks Toffy for that. That's it from my side today. But yeah, I'm far more skeptical than I ever was about stock trades. Yeah.
But I still don't want you guys to be scared of trading in the stock market.
Too late.
Because I would say that a lot of my assets, it's in there. It can be safe. It can be somewhere that you can build up your wealth if you study well about the company, that stock, and if you have a good timing. So a good company will never go bankrupt, right? If you choose and study that company well. So as long as you don't keep trading, keep buying and selling, because you don't know which rhythm, whether you go into that stock in the right time or not, whether you buy and sell in the right time or not. You might buy it when it's so expensive and you might sell it when it's really cheap. So the best way is to pick out a few stocks, a few company that you are you believe that it's a really good company, very sustainable, and then find a good timing. So what I did for my portfolio is that I wait for this timing, for this crisis to happen. So I would say the COVID-19, this virus, is another crisis that I see as an opportunity, because the stock market in Thailand actually crashed down 2 days in a row. And people keep dumping, selling their stocks because they are afraid. They think that it will go lower and lower. So people keep selling, and we call this herding effect. One person run this way, another person keeps running the same way. So everybody sells their stock. On the other hand, I have a good company in my mind, and I see that the price is really low because everyone sells it, and this company can never go bankrupt. So that's the time. That's a good timing to buy that stock. And I think in your country, I think your stock market got affected a lot from the COVID crisis as well. And I think there are many companies that are still underpriced. So you can have a look at that. If you like a certain company, you have a certain company in your mind, have a look at their historical price, whether it drops a lot more than they should be or not, because there are a lot of people who are still afraid. But well, think about it. When the situation gets better, things will get back to normal, and that company still keeps running, still keep making profits like they have been doing for the past 10 or 20 years, and the price will come back to the same place where they were prices. So for my example, what I did, the stocks I bought during the crisis is the airport of Thailand. Because this stock got affected a lot because we closed down the airport, right? So when this news is announced, the stock drops a lot.
King
so
Power.
that's the time that I buy. Not King Power, but the Airport Authority of Thailand. Yeah. So that's the time to buy it because it's a monopoly. There's only one airport company that belongs to the government. So that's the only stock I bought during this crisis.
Yep.
So don't be scared.
Yeah, I'm definitely not going to be scared of it, but like you said, diversify. Let it not be your only income.
Mm,
Whatever you can save up, chuck it into the trading, but everything else will be somewhere else. If it works, if it doesn't, make sure it's money that you can. That's what we say in gambling side of things is, don't put up money that you're not willing to lose.
true.
Yeah.
Yeah.
Thank you so much. I think I'll just open up the floor to everyone else to either say thank you or a little bit of express their views, and we can round up because we are about at 6 o'clock right now.
Well, 7 o'clock South African time. Consider that, please. and
Midnight.
12 a.m. Thai time.
Martin, are you not in the South African time?
No, I'm in Isle of Man in the UK, so British summer
Oh,
time.
that's why. Ah, right.
Can you not see they're sitting next to the windows to enjoy some sun for a change?
And it's shining. And look at Amber. Look at Amber. The sun is shining while we are sitting in the dark here. Nice. Nice problems.
Well, you don't like the winters from here, so I'll trade the winters for that summer, please. Cool. Anyone, please do go ahead.
Thank you very much, Toffy. Such an informative session. Thank you for the little bit at the end because I was getting fearful as well. But your last two sentences really calmed me down to say, yes, it's a big risk, but you need to be smart about it. And as long as you're smart about it and you are rational about it, it can be quite a good investment. So thank you very much. This was very informative.
You're welcome.
You know, this kind of, oh, sorry, there's no hand to put up here. So if I'm free to speak, I'm just going to speak for 5
Just
seconds.
do it.
Yeah. So yeah, this kind of a conversation is very rare to come up anyway. I mean, the kinds of things that we talk about normally are just very lame things and, you know, normal stuff. But yeah, it's quite it picks up your mind, Vincent, when topics like this come up, because you sort of get out of your comfort thinking into thinking about serious things, which is it keeps you thinking, it keeps you going, and the relaxed mind wakes up to sort of have something. So yeah, thanks. I'm grateful that I have been part of the session until the end for the first time. Oh Lord, thank you guys.
I'm so glad to hear that. Thank you.
Right.
I'm going to jump in here. I'm going to take the opportunity before Vincent goes ahead. Toffy, thank you. Thanks so much. I think more than anything, these are not conversations we have amongst, young Black women. They're not conversations we speak about, not things we educate our kids or communities about. And as much as I know you've come at us from a perspective of let's do good, let's find the people that are in these spaces and let's see how we can help them, I can't help but move away from the idea of how do we capitalize on this for good or for different things. So how do we take this theory and build on it for alternatives? I mean, I just threw out there, how do we get people addicted to using condoms every time they have sex? But in all our spheres, we're doing different things all the time. So how do we use that behavioral change that in this specific context relates to finance and gambling, etc., but actually take it and build on it for our own work and the works that we do. So thanks for sharing. Really great insights.
Right. Yeah. And also thank you from my side, Toffy. The one thing that I'm very that I was very wary about is the fact that we've got such a big time zone gap, and to keep you in the middle of the night when you've worked the whole day. Really, from the bottom of my heart, thank you very much for being available to us. And yeah, it's quite interesting, quite informative. I'm still nervous, so okay, fine. But in any case, yeah, it's been quite informative. And I wrote the 2% with big and bold letters because, yeah, I think it's very important to be mindful of the fact that, you know, there's more risk than there is benefit, and one has to go in with great caution. So yeah, thank you once again, and appreciate your time and knowledge and sharing that with us. Thank you.
I think he's gone.
He's gone.
Thank you, everyone.
Thank
Toffy, do you
you.
have any last words?
I have to apologize being in my pajamas and tired face. It's midnight here in Thailand.
No apologies needed.
Yeah.
You look fine.
Thank you.
Okay.
Go, Daddy. Go, Daddy.
Hey.
Is he
Thank you
blushing?
so much. Cool. Thank you so much, guys. I guess we can stick around and talk with whoever's still available, but if you need to drop off, please do. We're not going to hold you back. Thank you so much for attending. It's been a lovely recording. I reckon Vincent can stop the recording, and then after that, we can just have a frank conversation, whoever wants to.
Yep.